Today is Tuesday, June 30th, the end of the quarter, the end of the strongest quarter that we've had in since the 1990s. So that's a long time, right? Volume, we're going to see the volume in a second, but the Dow had a strong afternoon. NASDAQ just typically had a very strong day. The McClellan oscillator ticked its way back up to the neutral line, but the selling that we were expecting to see at the end of the strongest quarter, mutual funds, hedge funds, trying to lock in some profits to show a good second quarter book. It certainly didn't happen yesterday and today. It might have happened a couple of days last week. It may have even happened 2 weeks ago, but it certainly didn't happen as some were predicting. The volume in advancers and decliners, a little bit lower volume in the advancers, bigger volume in the decliners than yesterday. Let's go directly now to a lot of charts and let's look at Fibonacci's. Here's the Dow Jones. Other than being very gappy on the way up, and I didn't even draw all the gaps. There's a gap in here and there's a gap in here. So we've got a lot of gaps all the way up here, but look at the retrace we've done. From the pre-COVID high to low, we hit 78.6%, and we only had 2 days where we finished above that 78.6, and then we went down and tested this gap, and now we seem to have broken above the golden ratio 61.8, but we still have this gap here. So that means that the Dow is, I would say a little bit range bound here. And I'll even put in an arrow right there to say that that's what I think is going on, a little bit of range bound. The SPX finished at 3,100, and you can see that 78.6% was resistance in this area here. Now we bumped up against this, we bumped ahead of the 78.6 back here at the early part of June. But now we've got similar above the 61.8 and then below a gap. So we could say that the S&P may be a little bit range bound for a while as well. And don't forget, we've had this bullish cross now of the 50 EMA over the 200, which should mean that the market should be pulling higher. And it did come down and test the 50, but didn't come down to test the 200 as I really thought that it would do. But since that's at 61.8%, I still think that there's a possibility that before we go much higher, that we do come back down and test this 61.8 and either the 50 SMA or the 200 EMA. Now the volatility index just moved a little bit sideways. Apple. Let's look at Apple and its Fibonacci's. Apple topped out right here on June the 23rd, had a little bit of a pullback, but it looked like 138.2% of the coronavirus drop is where Apple had its reckoning. And now it's coming up to that point again. So keep an eye on 138.2%, 367.80 as a break for it, and the next target would be 380. Amazon, 138.2%, and that's using this big wave up here that started in 2015, terminated in September of 2018, pulled back to 61.8%, back to a double top, back down to 78.6, now up to 138.2, and just finished a little bit above that. This is a weekly chart, so we can see all of the data, but 138.2, so the Fibonacci's are working there. Caterpillar, if we take a Fibonacci from the coronavirus high to the coronavirus low, January 2018 down to the coronavirus low, we can see that 61.8% is what stopped us. So it's working there. If we take the coronavirus high and low, 78.6%. So weekly chart, 78.6%. So either one of those, but they show you that both, depending where you want to pick your high, both of them were dictated, resistance was dictated by the Fibonacci's. Now on Facebook, which you would expect to have dropped today when more than half of their advertisers, a bigger percentage than that, have basically said they're out for the rest of the year because there's just too much politics going on, and they're referring to the politics of hate. And a lot of advertisers don't want to be associated with that. If people are just coming to Facebook to complain about one side or the other, they don't think that it's really a place that they want their brand to be visible when people are angry. Now, if we look at this is the January 2020, so pre-coronavirus, Facebook, coronavirus bottom, 114, sell at 127.2 perfectly, and then it pulled back to 78.6. So the Fibonacci's are really working for Facebook as well. You look at NVDA. NVIDIA's got some Fibonacci's working for it, 150% on a Fibonacci that started in October 2018 down to December. If we want to change that, so that's 150%. If we want to change it, we want to look at the coronavirus Fibonacci. Does that play out? Well, yes, it does, 150%, and then support at 138.2. So Fibonacci's playing there as well. Netflix, here's the here's the July 2018 down to January of 2019. You can see 127.2. Not quite there. We should have put it up here, but still we get 127.2. If you take the coronavirus and you just look at its Fibonacci's, 161.8. Only finished 1 week above 161.8 and then fell back down to 138.2. Whirlpool, same thing here. If we take this move up, which came back down to about a 50% pullback, then up to this Fibonacci, then down to 88.7. These are not strong Fibonacci's, but nonetheless it does show that this is a stock that's being technically traded as well. If we take the coronavirus Fibonacci, what have we got? We've got stopping at 78.6% of the, this is October 2019, so this would be more coronavirus right here. And then we've got 78.6. Take this minor one out of here, 78.6. Pull back to 61.8, 50%, 38.2 were also places where the stock found support and resistance. Walmart, we're taking this down bit here, which is the first 6 months of 2018, and we can see that 178.6% was its top, and it pulled back to 127.2. So the message here is look at the Fibonacci's, one more, and that is, I forgot, W, that's the Wayfair. This is 2019 to January 2020. This is a very big pullback, and we saw its resistance at 127.2 and support at 114.6. So whatever we look at, and the last one's going to be Home Depot. Home Depot, we had this channeling period in here, and then we had this massive move up. So we took that as our Fibonacci wave. We had a pull back to 61.8. Then we had the double top, small pullback, struggled in here, never got up to 127.2, finally got up to 127.2, and now is pulled back from that. So Fibonacci's all over the place. That's 9 minutes and 30 seconds. So that's all I'm going to talk about today. But the Fibonacci's are extremely important to look at. Where I think we're going is in the SPX. I would love to see it come down and test 61.8 and then move back up again. The Dow Jones, I still think, pull back to the top of the gap and then move higher.